The stock market is about to go insane tomorrow. We're standing at the edge of a liquidity surge unlike anything we've seen since the pandemic. $4.7 trillion is about to hit the US economy over the next 9 months. And while retail traders are still chasing AI headlines and 24-hour news cycle, Wall Street already knows what's coming. The institutions are positioning ahead of it. They always do. This isn't a crash setup. It's not a bailout story, it's a flood. And when that much money moves, it doesn't trickle into the market, it detonates inside it. Tax refunds will start injecting roughly $1.2 trillion in late February. Corporate repatriation adds another $2.1 trillion by summer, then another $1.4 trillion hits through accelerated CapEx incentives by Q4. Added up, $4.7 trillion, real liquidity, and it's going to search for yield, for assets, for anything tangible in a world that's still pretending inflation is gone. At the same time, the US is pushing forward a $175 billion missile defense network called the Golden Dome, designed to intercept hypersonic weapons from orbit. Greenland is the anchor point. That's why Trump is suddenly talking again about buying it. It's not about real estate, it's about the Arctic vantage point, the ability to see everything first. And because nothing in this country happens without leverage, Trump is tying it to tariffs. 15% on European goods starting February 1st, 25% by June if Europe blocks a deal. Denmark, France, Germany, the UK, everybody's on the list. The EU thought tariff wars were over. Markets are already reacting. Today, the S&P was 25% up from all-time highs, 0.25%. Retail poured $12 billion into stocks last week, the most in 9 months, just as institutions sold into the string. Oil fell 4% after reports that Trump called off a strike on Iran at Netanyahu's request. Silver's up 30% this year and starting to shake. Taiwan Semi posted blowout earnings, profits up 35% year over year, and the market still sold off. That's not random, that's rotation. Money's moving to hard assets and infrastructure, energy, defense, compute, anything real. Which brings me to CleanSpark, ticker CLSK. It's a Bitcoin miner on the surface, but what it actually builds is infrastructure. Power facilities that can mine Bitcoin or run AI compute, depending on where the margins are. That's strategic. Their energy cost is just 3 cents per kilowatt hour, almost unheard of. They mined 1,200 Bitcoin in Q4, up 48% year over year, and they're expanding fast. It makes you want to gulp. Now they're leasing compute to AI firms. Same hardware, new revenue stream. When Bitcoin rises from 42,000 to 60,000, their profits don't just double, they go parabolic because their costs are fixed. That's operating leverage on top of the AI story. And who knows, the market could go up 25 basis points on Monday. And not just up in a straight line, but there's a tug of war between liquidity and risk, between positioning and institutions. $4.7 trillion. You don't get a quiet rally when that floods in. You get volatility with the volume. Everyone moving. There are risks. If Bitcoin drops 20%, miners drop 40. If tariffs escalate, inflection could be up and down as it, hits the market. But until the Fed cuts actually happen and the Fed chair change happens in May, we're going to see energy ramping, AI infrastructure ramping. The same grids that power the Golden Dome are powering the next generation of compute. And that's not a coincidence. It's policy by design. And it's why I think the market's about to go insane again tomorrow. We're sitting right at the crossroads of fiscal flood and strategic rearmament. The only question left is whether you're positioned for it or you're the liquidity someone else trades against. I'm Sam Putnam. Do your own research, stay rational, and get ready, because the flood is coming either way. Check us out at stockscommunity.com. Give it a try for 7 days, $25. Best trade goes in your Discord every morning. And if you like to read these videos rather than watch them, head over to free.stockscommunity.com, sign up for that newsletter, and you'll get this in your inbox. I'll see you in the next one. Hit that like button if you want more videos with this kind of tone and research.
Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.